Hey, if you've been wondering what's going on with the Huntsville real estate market, check out this monthly market recap. Hey, my name is Brandon Taylor with Capstone Realty. I'm a recovering engineer turned real estate agent in Huntsville, Alabama. And today I'm diving into the numbers and statistics to see how Huntsville did in the month of April and what that means for buyers, sellers, and investors in this market. First, I want to give a little plug. I do something called Walkthrough Wednesday every week on my Instagram, where I walk through two houses that are on the market. I talk about things buyers, sellers, or investors may be interested in seeing as I walk through it. I do some polls, some questions, get your input. It's a lot of fun. I do it in my story, so it's available Wednesday afternoon for 24 hours. So I hope you'll check it out. Brandon K. Taylor on Instagram. I'm starting back this Wednesday. I haven't done one in about 2 months because of the stay-at-home order, so I'm excited to get back on it. And we'll dive into the numbers. Here we go. So when looking at a market, any market, you're always looking for the supply and demand and how those two interact. So we're going to start on the supply side. First, I've been looking at some daily metrics throughout the month, and so I'm going to dive in and look at both the daily metrics as well as the monthly metrics to compare. The daily, we'll see just how trends are changing quickly, and then we'll look at how it stacks up when we take a step back. So starting out with the daily supply trends, we're starting out with looking at new listings. So here we go. Here are the new listings every day over the past 2 months. You can see that we were pretty steady through most of March. There's a definite decrease at the beginning of April, all the way through about the 12th or 15th or so. And there was a little bit of a recovery and a little bit of lag, and then the last 2 days of the month of April, there was another big spike in listings. And if you look back, you can see that this happened at the beginning of April, the beginning of May, the beginning of April, and the beginning of March on this chart. And a lot of that has to do with new construction. So builders often list all of their new listings at either the end of the month or the beginning of the month. Now we're gonna take a step back and look at how this month's new listings compared over the past 3 years or so. Look at this chart, you see that we had 836 new listings in the month of April. This is a pretty big step back from our spike to 931 last month. But comparing it to last April, we were at 834 versus 836. So 2 houses difference, which is essentially, it's the same, right? So we're less than 1% difference in number of new listings, which I was a little bit surprised at because it seems like we've had that slowdown throughout the month, but that slowdown only brought us to our last year's pace for listings. Our supply trends is that we have seen a decrease in listings compared to what we were seeing in March. That decrease is just to our level that we were last year, not to some very low level. So now we're gonna look at demand. Demand is a little bit harder to directly measure. You can't just say how many people out there are looking for a house and have a good metric to measure it by. But what we can do is we can measure some proxies, and those things are number of pending deals, the days on market, and the number of closed deals are ways to look at demand. Also on here we have some daily as well as monthly metrics, and so we're going to look at the daily pendings and the average days on market daily. And then we're going to take a step back and look at the days on market and the number of pendings monthly, and then we'll look at closed sales monthly. Pulling up the daily pending sales chart, we see that we have a similar trend to what we just talked about with the listings, where we held pretty steady in March. There was some softening towards the end, but then in April there was a pretty distinct change where there was a downward for the first half of the month, where we dropped for pendings, it was like from 28 down to the upper teens, 15 or 16 or so pending deals a day, I think on the 12th of April. And then there was a recovery, and we've been kind of gradually increasing from that 15 mark up to almost 25 deals a day, pending deals. Now we'll look at the monthly chart to see how this stacks up with past Aprils. This April we had 768 pending deals. That compares to 763 in March, 747 last year. So we are up both month over month and year over year. Month over month is basically flat with 0.65%, but over last year we are up 2.3% in the number of pending transactions that we have. Pretty surprising considering we're in a worldwide pandemic. So the demand is still very strong using that metric. Now let's look at days on market. This is simply a measurement of the number of days that a house that went pending is on the market for the daily metric. I will say the daily number doesn't have a ton of value because it can have such a large spread in the metrics, and it can be a pretty small number of data points. We have a small sample size problem, so it's pretty sensitive. Because for instance, if we look back to, I think it was March 12th, There were 2 houses that had been on the market for over a year, which is pretty atypical, and there were only 13 houses that sold that day. So that's why you see that big spike. And so each day doesn't mean that much, but the longer moving averages, especially the 28-day and the 14-day, are a little more telling of the trend. This metric is just kind of volatile, and so the longer moving averages, where we get the more data points, are a little more telling of how the market's moving. Looking at this chart, you can see that the 28-day moving average did go down, similar to what we were just saying about both supply and demand, and it went down throughout March and the first half of April, and then made a pivot sometime in the middle of April and has recovered some to around the 22 days on market average for these last week to 10 days that we've seen. So now we're going to take a look at days on market for the month. And you can see that our monthly average days on market, this is on closed sales, not pending sales. So it's not comparing apples to apples with the daily chart. But on closed sales, we are seeing that the days on market are still decreasing. And I am being a little bit cautious about any of these metrics that used closed deals. They have about a 30 to 60 day lag from when they go under contract until they are closed. Looking at the monthly days on market, we see that in April, the average days on market on closed sales was 34. This is down from 35 in March and compared to 42 last April. So we're still seeing a decrease of 7 days year over year and 1 day month over month. To kind of look at how the supply and demand are related to each other and how these metrics kind of point to how that relationship is happening. So we look at there's 2 things that I like that I've started looking at and pretty good indicators of that. And one is, I'm just calling it the delta or the balance chart, and it's just the number of new listings in a day minus the number of pendings in that day. So each day we find out, did today increase our inventory or decrease our inventory? And then if you look at the 7-day and 14-day and 28-day moving average on top of that, you can kind of see what that trend is, and it should give us an idea of if we are net increasing and how quickly we are increasing. Here we go. So here's the chart, and you can see that throughout March, we were having a net increase that was increasing. Then there was the same trend we've talked about everywhere else throughout April, and a decrease in inventory. And that even got to the point where towards the end of April, we were averaging over 7 days that we were losing inventory. But as we said, there was a spike last day in April in new listings. And then there was a spike right after that in new pendings, which I think makes a lot of sense logically, that they're going to list it, in this case on Thursday and Friday, and then they sold a lot of them on Saturday and Sunday, which isn't real surprising, I don't think. So the demand, when supply increased, demand did with it, which shows us that the supply is the constraining factor. On a monthly level, we look at the ratio of listed homes to the closed homes, and this is called inventory. As you can see, the inventory, also known as absorption rate, is basically how many months is what the unit is, would it take us to sell all of the inventory we currently have. It's a ratio of supply to demand. 1.5 months of inventory is what we're sitting at, 1.5. And this is compared to 1.6 last month, and last April, we were up to 2.1. So we've gone down 0.6 months. The kind of magic number where it changes from a seller's market to a buyer's market is around 6 months. So we would need 4 times the amount of inventory we have right now. So we're sitting at about a little over 1,000 homes. We need almost 4,000 homes on the market to be at that point. So that would obviously be a very significant increase in inventory. Try to end this with a so what should you do kind of summary. In a strong seller's market that is supply constrained, buyers need to go out aggressively. As I've mentioned in the last couple of videos I've made, that there's not time to play around. I have a little story for buyers. So I had a buyer who came in and made an offer on one of my listings. They came in between closing cost concessions and the price concessions. They were asking about 5% discount over the list price. And so it wasn't a terrible offer, not a great offer, not super enticing, but my seller was kind of motivated and we didn't have any other offers coming that we knew of. And so he countered and he changed to about a 2% concession. They countered back at about 4% total concession. And so my seller decided to sleep on it, think about it a little bit, talk to his business partner. Well, we got another offer. And so we asked for best and final, and after all of it was said and done, the person who had the day before wouldn't go above a 4% decrease was now 2% over the list price. We ended up that he didn't get it. That wasn't enough. And so because he played around and wouldn't settle for a 2% discount instead of his 4 or 5% discount, he ended up not getting the house that he wanted. And so that's kind of a cautionary tale that it's not a time to mess around. We go in and make offers, because if he would have honestly just taken the 2% counter, he would have had the house. And instead, he had to up it, 4%, 2% plus 2 more, and still didn't get the house. If you're early and don't play around, you have a chance of getting not a deal, but you'll get the house. For sellers, this means it is a great time to list. Now is the time you can be a little bit greedy in how much money you ask for your home. You can expect it to sell fairly quickly, especially if we price it right, which means you can be a little greedy, but you can't be crazy. And so there are some crazy out there. People get a little too greedy. You can look at the high comps for the condition of your house and probably push the price just a little bit from that, and you'll get a good bit of attention. Finally, investors, this is still a very good market. It's appreciating well. Rents are solid and going up all over town. It is a good flipping market, because if you can find a deal and get it rehabbed, it's a very good market to be in that selling position I just talked about, where you can be a little greedy and expect it to turn over quickly. Thanks for making it through this whole video. I appreciate you all. I appreciate your time, and I hope this has been helpful. I can't believe that it's already May, and I hope if you need any help with any real estate, let me know, and I'd love to help. Thanks a lot, guys.